I'm Phil Rosen. I'm the Chief Market Strategist for ProCap Financial. We're watching Taking Stock.
Two minutes ago until the only closing bell down here on the trading floor of the New York Stock Exchange. Do not adjust your monitors at home. I am back. I'm your host today, JD Durkin. A jam-packed next 30 minutes on this Wednesday afternoon edition of Taking Stock. Welcome to the broadcast, one and all. At this hour, we are expected to see a fresh round of all-time highs for the S&P 500 as well as for the Dow Jones Industrial Average. This market price action continuing following an absolutely monster two-day rally. The great Peter Tuchman, the Einstein of Wall Street, is on deck. We'll get his take right after the closing bell on today's trading action and much more. Specific strength across the major market indexes today in industrials as well as financials. Amgen, Nvidia, and Disney are the strongest performers in the Dow today. We'll talk a lot more about the house and mouse after a stellar earnings call earlier on today. Google, Chevron, Amazon are your Dow laggards. Over in the S&P 500, we look at 11 sectors of publicly traded companies: materials, healthcare, industrials, the best of the bunch, and your S&P 500 laggards, energy, utilities, as well as telecom. We got the amazing team from Blend, ticker symbol BLND, down here at the New York Stock Exchange, set to ring the closing bell. And a lot more Taking Stock with the one and only Einstein of Wall Street coming up right after this. But first, it is time for the close. And the crowd goes wild. I can only assume they are applauding for me on this Wednesday afternoon. Fresh all-time highs. So take a look at your final tail to tape. The S&P. Oh, Peter, yes. Look at the S&P 500. Oh. Just finishing down fractionally in the last minute of trading. We'll say it always takes a minute for the dust to settle.
It does. It seems like it may not be a record.
0.17. The Dow in record-setting territory, up about 0.5%. The New York Stock Exchange Composite Index in the green, 0.2, and the small caps, the Russell 2000, down 0.6. Nvidia, the best performer in the Mag 7. Alphabet, the hardest hit. SpaceX shedding another 12% today. But Peter Tuchman joins us now, the Einstein of Wall Street. All of this, I mean, we got a lot of green on the board, a lot of red, but it comes after two monster days.
Two monster days. And this morning, it doesn't feel like any bad news came out that made this happen. It almost just seemed like there was fatigue on the buy side, right? We've had a major rally for more than 2 days, right? And, we've navigated our way through a lot of it. And look, if you think about it, we've had a couple of companies where earnings were a little bit disappointing, and some that weren't that disappointing, but the market responded negatively. And the market is not very forgiving when they decide they want out of a stock. We're in a different mode here, right? In the old days when earnings are, you wanted to get out of a trade or get out of a position or a purchase, whether you're a hedge fund or a home office or whatever, you would usually take some time to do it. Now the market is in such a state where it's literally, I hit a buy button when I want to buy them, and I hit a sell button when I want to sell it. And it's not forgiving. It's irrational enthusiasm on one side and aggressive selling on the other. And so you saw that with AMD and a number of other names.
Oh, yeah.
And SpaceX. So SpaceX missed, right? And it's had a run, and obviously there's been a lot of a dark cloud over that spaceship for a little while. I'm not allowed to talk about individual stocks, but it feels the way that market sold off, it's just like, you know what, the buyers just got a little bit tired. Maybe they were too aggressive. Because when the market rallies the way this has for 2 days, you don't want to miss it. You feel like it's never another down. We used to say this, it's never another down day on Wall Street. That's what it's felt like for about a day and a half now. And so that one doesn't want to, and suddenly it's like, oh no, I've run out of stock, I'm getting a little tired. It wasn't even as if big sell side came in. Mm-hmm. It just felt like the buyers ran out of a little ammo, and they just got a little fatigued. Yeah. And so, and at one point the buyers just backed off and pulled away.
So Peter, I've been on vacation. I've been enjoying my time
we know that. Because while you were on vacation, we were all working.
And thank you all for working. I've been enjoying my time on a fishing boat on a lake in northern Minnesota.
Yes,
but
you have.
When I left for my vacation, West Texas and Brent, these oil benchmarks, they were a lot higher.
90s.
We really saw them come in. We saw the White House say, hey, we're getting closer to terms with Iran. To be fair, they've said that before.
Yes,
but what did you see the last few days about a reminder of where investors are and how they are thinking about the conflict in the Middle East?
Okay, so he also came out and said, I was about to put on the biggest attack in the history of war,
Right.
and as of today, I've decided I'm not going to do that, right? It's sort of a funny comment, but he said it, and he's never said that before, so it was a new one, right? Maybe it was ChatGPT, I'm not really sure, but that's sort of like, it was almost like, whether people are taking it seriously, and then the whole conflict scene. We've seen this before, where the market just disengages the conflict. We realize that it'll ratify itself when it happens, right? But we're not getting an edge from the information. And so why don't we just buy stocks on the lifeblood of the market, which are earnings? And the earnings have been good, right? 85% of the S&P that has reported has beaten.
Oh yeah.
Well, that's significant, especially coming out of a quarter that we were in the middle of a war in, right? So you would have thought, right, that it would have not responded as well. Yeah. Banks came out of the gate doing well. I found that curious because I was seeing, but it was a matter of a lot of deals happened. SpaceX deal happened, stuff like that. So I think at the end of the day, sometimes when you see this kind of thing happen, it's that the market disengages that breaking news story, right? And then it goes back. Let's realize too, we've been trading in the high 90s. The inflationary implications of that are major. And when you sort of take that Gulf of Hormuz story off the table and oil comes in significantly, we were down 8% one day, 7% one day, and you're in the 80s once again, we actually touched 67.39, which was a pre-war low a couple of weeks ago.
Oh yeah.
We bounced off it technically, but when you have that trade happening and you have that significant component of the market, which is oil versus the Dow, oil versus
kind of
S&P,
is, right? Yeah.
It's a huge thing. So that kind of has overpowered everything. And look, when you see that pullback, you have the market rally the way this one did.
Yeah, we're about out of time, but quickly, if I can get your take. We're under 100 days out from the midterm elections. Historically, the Stock Traders Almanac tells us this is the choppy part of the 4-year cycle, the run up to a midterm election.
Okay.
There's so much up in the air,
right.
And yet we've seen investors shake off a lot of these historical patterns. What do you be looking for in the next few weeks as Q3 continues?
You know what? I think it'll really depend. Was today that sell-off, the break of the massive rally, what you're talking about? Was that was what we saw? Was it the beginning of the choppiness? It's hard to say. There's so many components that affect this market. Whether it's tariffs, there was a bunch of tariff talk again today. There's war talk. There's oil talk. There's record high talk. There's guidance and earnings talk. So many components. Which one is the market going to grab a hold of and sink its teeth into? So it's hard for me to even predict what's going to happen. I can tell you what's going to be if they grab onto each one of those things. If it's about the earnings, the market's going to rally.
Sure.
If it's about the midterms, I don't really know how the market's going to react. It'll depend on Mr. Trump's reaction to that, right? If he starts putting a lot of energy, trying not to lose the midterms, well, that's going to put on a whole nother twist to the market as well.
Yeah, that's why we
so
keep...
each one of these things has a different cause and effect that it's going to be in the market, whichever the market decides to grab.
So that's why we keep notifications set for his posts on social
Exactly,
media.
100%.
Because the president tweets and the market's moving immediately. I'm
People
always
should
so
know
grateful.
that in the old days, a president, first of all, had very much less interaction with markets than this one does. And secondly, statements that had economic effect on the markets and whatever happened before the open, after the close, or at a designated news conference. It didn't happen at a 3 a.m. tweet.
Right.
That was the way of the rule. That was the rule.
I have a hard time imagining William Howard Taft would be out there
Tweeting
caring too much about the S&P 500.
Exactly.
I gotta roll. I'm always so grateful
pleasure.
for your time, man.
Nixon
We'll talk to you
5,
again.
let's go.
Nixon 5. Let's go. Here through the top. Analyst calls that move the tape this morning on Wall Street. First up, get a picture with the icon here. First up, UBS reiterating Apple with a neutral rating, saying its research shows flat App Store revenue. Shares of Apple up about 13% on the year. Next up, B of A reiterating AMD as a buy. We were just talking about it there with Tuckman, saying it's sticking with the stock after reporting results this week. Despite a massive beat, shares were down today, but they are up 120% year to date. Howie, let's swing around this way. Finally, Jefferies downgrading Best Buy to a hold from a buy rating. They say even EPS outperformance may still end up disappointing. Best Buy up 25% since the start of 2026. Howard, let's look at the House of Mouse. This is Disney, the one and only, up 3.6% today despite a miss on revenue for the quarter. Disney reporting a huge beat on earnings. This was one of the top dogs in the Dow Jones Industrial Average today. Parks and streaming divisions in particular really continue to be bright spots for the company. Disney shares having a nice day today, up more than 3.5%, but still down about 11% year to date. Well, as you may very well be familiar with, the team over at Reformation celebrated its highly anticipated IPO last week right here at the New York Stock Exchange. And that's when Kristen Scholler caught up with CEO Hallie Borenstein on the big day. Take a look.
The energy is palpable down here on the floor of the New York Stock Exchange, and I'm pleased to be joined by CEO of Reformation, Hallie Borenstein. Hallie, congratulations and welcome to the NYSE.
Thank you. It's amazing to be here. We are so honored. It's a huge day for Reformation.
Absolutely incredible. Walk me through the journey that got you to this moment today.
We have been hard at work just building a business that from day one really reinvented the way consumers feel about a brand. We modernized a brand in the fashion space. And so over the last couple of months, we have been out there telling our story to a wide range of really impressive investors, many who are our shareholders today. And so it's been an incredible testament to all of the work our great team has done.
What does this moment mean to you on Reformation's journey?
Today is an amazing day. It's really a milestone, but importantly, it's only the first day in a long journey. We have big aspirations at Reformation, and we aim to be a multi-billion-dollar organization, a brand that truly redefines retail. So today is one step forward in that mission.
Yeah. I want to hear more about what you attribute the company's success to. We saw the stock rise in its debut, and today's the first full trading day. Shares are up as well.
I love hearing that. We are a business that is truly predicated on amazing products and an unbelievable brand. So we have a brand that cuts through to our consumer with a really wide customer base. Both mom and daughter shop this brand. 20% of our new customers last year were under the age of 25. 20% were over the age of 50. So this is a brand that really attracts a wide audience and engenders incredible loyalty. We make great products. 84% of consumers say wearing Reformation makes them feel confident. And because of that, we know we have a real difference. And we also bring product to market in a super unique way. We can bring product to market as quickly as 60 days to really make sure we have the right product for the right time. So you put those two things together, brand and product, and it's a winning recipe.
I will tell you, I'm wearing a Reformation top. The color is lipstick, which I love, by the way. How have you seen the product evolve over time?
Well, we started as a brand that was definitely famous for dresses, but we've evolved to be a destination across categories, across occasions. And today, we have businesses in denim, in sweaters just like you're wearing, in shoes. And so we are really proud that 74% of our revenue comes from customers who are shopping across category. This is a business that can do a lot for our customers. She comes to us for the times that matter most, and we will continue to offer great products across all of those moments.
A woman-led business servicing female customers. What is your message to women watching today?
I think the real question is, why aren't more women leading companies like this? We sell products to women. I wear the clothing. I know how women think. And so my message is just keep thinking about who the end consumer is. And we all should be out there doing a lot more of this.
We've got a lot of fans here in the audience. Of course, at the New York Stock Exchange, we saw them around the bell. Yes, they're making some noise. Hallie for Reformation here today. All right. We love to see that. I'm sure it means a lot to you to have all of these people here today celebrating.
It's an incredible achievement. Yes.
Hallie Borenstein, CEO of Reformation. Hallie, thanks again.
Thank you.
Welcome back to the show. Our next guest joins us now. Say hello to Sandeep Johri. He is the CEO over at Checkmarx. Sandeep, nice to see you here. Very grateful for your time on this Wednesday afternoon. We got to start with a question that might be top of mind for a lot of our viewers here today. What is Checkmarx, and what problem are you solving specifically for developers?
Yeah, so first of all, thank you for having me over. Yes, I'm here at Black Hat in Las Vegas. Checkmarx is one of the leading companies that does application security. So if you think of any enterprise that is building applications, we look at their code and we make sure that there are no problems in the code from a security perspective before they put it into production.
Tell us a bit more tell us a bit more about Checkmarx One in particular. Why build a centralized cloud platform for application security?
Yeah, so, applications have gotten very complex. They have custom code, they have open source, they go into containers, they go into the cloud. So applications are very complex, and you have to look at various aspects to really really make sure that you're securing them. So Checkmarx One is a leading AppSec, which is short for application security platform, that we can tell a customer, we can look at it holistically and cover every aspect of application security, including AI-related security that is needed before the, customers put applications into production. So Checkmarx One is kind of the comprehensive application security platform, single pane of glass to give you all the answers and get a cohesive view on security for your applications.
Sandeep, I have a sneaking suspicion you are well familiar with the phrase SaaSpocalypse. Software companies have been throttled at many points over the last 52 weeks as a result of AI disruption. How has the industry adapted?
Well, first of all, there's the SaaSpocalypse, and then the security companies took a big beating as well. But most of the security companies are people are very concerned about security associated with AI, and all the public security companies are doing very well. Now, we as a private company obviously are embedding security, embedding AI into our products, and customers have high anxiety because AI not only is powerful, but it also allows hackers to weaponize these models. So application security, as an example, has become even more critical. It's become a board level issue where the boards are asking CEOs, what are we doing about Mythos? What are we doing about these models discovering new stuff? Are we taking care of that? So what we've seen is an amazing amount, increased interest in security. For that matter, we recently announced a new product in partnership with Anthropic and AWS, because customers are looking for a solution that addresses the AI needs. So I think the SaaSpocalypse was overrated, at least for the security companies, because we see a huge enhanced interest in security, actually, because of AI.
I know many people would agree with that assessment, of course. What are some of the biggest cybersecurity risks, Sandeep, you think too many businesses are still underestimating?
With AI, the weaponization of the models is one of the things that people have to really worry about. But before, it was, it's very difficult to exploit a vulnerability in your application. The weaponization allows it to make it very easy for a hacker to put together pretty sophisticated attacks. So before, you didn't have to take care of every vulnerability you discovered. Today, you have to remediate a lot more. So the thing that customers, the customers need to really think about, enterprise customers need to think about, is every application, make sure it has been tested and checked for vulnerabilities, because the barrier to exploit just went down because of AI. And that is something most customers recognize, most enterprises recognize. That's where the anxiety is coming from. But there's going to be more attacks, and the weaponization allows it to be more frequent and more easily attacked, and therefore people have to be more secure.
Sandeep Johri, CEO of Checkmarx, my friend, it is nice to see you. Thank you for taking the time on this busy Wednesday to join the broadcast. Have a lot of fun out in Vegas. We'll talk to you again soon.
Thank you, JD.
Folks, don't go away. A lot more Taking Stock coming up on this Wednesday afternoon, live from the New York Stock Exchange. Don't go away.
2, 1.
Welcome back to the broadcast. Joining me now down here on the trading floor of the New York Stock Exchange. Say hello to Peter Matt, CMC's president and CEO, and to his right, Mr. Paul Lawrence, CMC's CFO. Peter, Paul, great to see both you guys. Thank you both for making some time for us.
Thank you.
Peter, I'm going to kick things off with you. CMC has long been known as a steel company. Talk to me about some of the ways that the business continues to evolve.
Great, absolutely. So we continue to be a steel company. It's an important piece of our overall company. We've recently diversified into a broader range of early stage construction products to meet the needs of some of the big construction projects going on around the U.S.
Talk to me a bit about the quarter. What do we see driving a lot of the strong results that you and your team, I'm sure very proudly, eagerly reported to investors?
You know, it all comes down to the heart and strength of the construction market, and there's tailwinds. For us, it's infrastructure, it's private non-res, that being manufacturing reshoring, that being energy build-out, that being chip plants. You know, that's what's really driving strong construction activity, and that's the strength behind our business.
Yeah, Paul, stay with you for the next one. Talk to me a bit about the precast business. How is it performing? And talk to me a bit about the integration and how it's going.
Precast business is a great business. In comparison to steel, it really provides very stable, elevated margins. That's what we like to add to our financial profile at CMC. Integration's going great. We're in the early innings, but as Peter said, it's all about extending our offerings to our customer base, and we're excited around how customers will really appreciate the benefits of being able to acquire both precast and steel products from our business.
Right on. Peter, the mic is yours. A bit more about precast. Why was it the right bet for this moment?
Well, we spent a lot of time thinking about that and working on different areas, and it fits really nicely with our business. It is a value-added product. It addresses critical construction challenges. It has very attractive margins, as Paul said, and it really complements our business.
Peter, I'll stay with you for the next one. We've had a lot of conversations here on Wall Street, especially since the beginning of this particular administration down in DC. Tariffs and the importance of reshoring. A lot of this manufacturing, these conversations back here to the United States, back here stateside. How do you think CMC stands to benefit?
Yeah, tariffs have been an important piece for our company frankly, in keeping out unfairly traded imports, and so it's been a positive for our company. We do believe that there's bipartisan support for tariffs, and we are 100% in favor of Section 232 tariffs.
All right, fair enough. Let's talk a little bit more about the finances. So to do so, over to the CFO if we can. What are the key financial milestones you think investors should watch, especially over the next 4 quarters or so?
You know, what we're really focused on is 2 aspects. One is improving our EBITDA margins. We're doing a number of actions towards that, including a lot of self-help, getting more out of our existing assets, and the other one's cash flow. We're at a point where over the last 10 years or so, we've invested heavily in the business. Now's the opportunity to reap the benefits of those investments, and those will turn into cash flow generation.
And Paul, stay with you. How about Investor Day? Talk to me all about it. What should people know, and some of the top of mind priorities that you most want to communicate for Investor Day this year?
Yeah, today, you know, it was a great day sharing our story with the investors. You know, really 3 key takeaways. You know, from an earnings perspective, EBITDA growth of target for 2029 and mid-economic cycle, 1.65 to 1.8 billion. Free cash flow, 1.4 to 1.5 billion, and returns on invested capital of 13 to 14.5%. That represents a very materially different financial profile than the CMC of the past.
I'm going to wrap up with Peter. I got about 30 seconds if I can. Some of the top trends you're seeing across the U.S. construction ecosystem these days, it's worth paying attention to.
Yeah, absolutely. Well, infrastructure is clearly one. We believe there's going to be a follow-on infrastructure bill. We're excited about that. Okay. Pipeline of non-residential projects. There's just an enormous number of projects coming through the pipeline on things like chip plants and energy sources and so forth for the data center build out. So tremendous amount of activity in both those spaces.
Paul Lawrence, Peter Matt, firm of CMC, we got it right above your head here, gentlemen, 4.2%. That's a nice intraday gain. Congratulations. Thank you for taking some time for us here for the show today.
Appreciate it.
Travel safely. We'll talk to you guys soon. Folks, don't go away. We've got a lot more taking stock coming up right after this.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where payments performance becomes margin. Today we're going to be talking about trust payments, a reminder that payments don't end at authorization. Trust payments provides acquiring and processing, often optimized by vertical. So how does trust payments actually make that money? First, merchant acquiring fees. Trust earns revenue on every transaction it processes for merchants. Second, optimization economics. By improving those approval rates, routing, and fraud controls, Trust helps more transactions succeed, directly increasing, guess what? Merchant revenue. Third, vertical specialization. Industry-specific expertise makes the platform harder to replace and less price sensitive. And this matters now because merchants chasing margin care as much about success rates as they do about fees. Trust Payments monetizes that reliability. That is how Trust Payments actually makes money, by turning payments performance into revenue. Is there a company you want us to feature? Drop it in the comments and it might just make the cut. In the meantime, back over to you.
Tomorrow on Wall Street, who cares? Today is our final day for our one and only Robbie, our amazing summer production intern. My man, it has been such an honor. Great job this summer. We'll miss working with you. We'll see you again soon. That's it for today's edition of Taking Stock. Have a great Wednesday night. We'll see you again tomorrow.